Hello everybody, and thanks for watching. So what's happened in the economy and the financial markets since my last video? Well, it's kind of been more of the same thing. Inflation has continued to come down as the Fed has continued to raise interest rates. So what's different? Well, this pattern has to end, and we're nearly at that end or already there, in my opinion. So what happens next? Well, we enter a whole new phase of the economic cycle where the market doesn't have to worry about the Fed continuing to raise. And then soon after that, or maybe a little ways down the road from there, the next major move in interest rates will likely be down. And when the Fed lowers rates, it's usually like rocket fuel for the market. I mean, that's how I see things anyway. So there's an old saying on Wall Street, don't fight the Fed, meaning when the Fed is raising rates, the market usually struggles. And when the Fed is lowering rates, don't bet on poor market performance or you're likely to get pummeled. So 2 or more years ago, the Fed had a job to do, raise interest rates to knock out inflation. They started the job late, but they successfully brought down inflation from a peak of about 9% to a current reading of more like maybe 3.5%. The Fed's goal for inflation is not 0, but about 2%. So we're not there yet, but we're getting close. True to form, market performance over these last 18 months has been less than inspiring. By the way, I'm finding when I speak with my clients recently, they're frequently saying, Mike, you're saying inflation's been coming down a lot, but I don't see it. I don't see any prices coming down. Well, the rate of inflation falling and prices going down are two different things. If the rate of inflation is falling, this is called disinflation. Disinflation means the rate of prices increasing is declining. This is what we want, and this is what we've been getting big time. On the other hand, you could have seen the price of a few things decline in the last 18 months, like used car prices, for example, but most things have not declined in price, nor will they. A decline in prices is called deflation, and if sustained, it's actually, as counterintuitive as it might sound, devastating to an economy. It might sound good if everything costs less in the future, but it isn't. Let me give you an example. Let's say you wanted to buy a new refrigerator, but the prices of refrigerators keep declining every month. You might be inclined to wait before you buy, and wait, and wait, and wait. And so when prices are falling, people hesitate to buy things, and the economy goes in the tank. So, inflation is a problem we know how to fix, and it's nearly fixed. Deflation is worse, and we have no idea how to fix it. Let's hope deflation never happens. So, very briefly, what else is going on? Well, number one, we've got the Hamas-Israel war. That is tragic on so many levels, but not likely to affect the economy unless other nations were to get involved. But it will probably add some short-term volatility to the market. Number two, we've got an election year coming up. Did you know that the S&P 500 has never been down in an election year since World War II? I don't worry about the election. Number three, and for the first time in a while, corporate earnings for the third quarter are expected to, and so far they are, coming in showing positive earnings year over year. That is good news. So, in summary, I believe that we're at an inflection point right now with the economy. The big problem since the pandemic has been inflation, but we nearly have that licked. I could be wrong, but I see brighter days ahead. Until next time.